Let's talk about the US national debt, currently a staggering $35 trillion. That's a number so massive it's hard to even wrap your head around it. Imagine stacking dollar bills from the Earth to the moon, and you'd still fall short. This isn't just a statistic, it's a weight pressing down on every American, whether you realize it or not. The scale is so huge it almost feels unreal, like something out of a science fiction story. It's the backbone of our economy, and it's growing by about $1 trillion every 100 days. That's like adding the entire GDP of a small country to our debt, over and over again in less than 4 months. The interest alone now costs more than the entire federal budgets for education, transportation, and Veterans Affairs combined. Every year, billions are funneled just to pay interest, money that could have gone to building a better future. We're spending more to borrow money than to build roads or support veterans. It's like maxing out a credit card and only paying the interest, never touching the balance. Yet politicians barely mention it. It's the topic everyone avoids, even though it affects every policy and every budget. They'll argue endlessly over minor issues, but when it comes to the debt, it's radio silence. The real crisis is hiding in the background, ignored while the spotlight shines elsewhere. This is a crisis hiding in plain sight, a ticking time bomb at the heart of the American and global economy. The longer we wait, the more dangerous it becomes. The math is catching up to us. Sooner or later, the numbers will force a reckoning, whether we're ready or not. The numbers are no longer just big, they're unsustainable. We're reaching a point where the system can't keep up. If we keep ignoring this, the explosion will be impossible to ignore. The fallout could touch every aspect of our lives. The quiet part is getting louder, more and more people are starting to notice, and the conversation is growing. The debt isn't just a future problem, it's a present danger. It's already shaping our economy, our opportunities, and our daily lives, and it's time we start paying attention, because the longer we ignore it, the harder it will be to fix. For decades, the US could borrow almost without limits, seemingly immune to the financial constraints that other nations faced. That's because the dollar wasn't just America's currency, it was the world's reserve currency, trusted everywhere and used in global trade. It was like having an infinite credit card with ultra-low interest rates. But now, that era of easy money is ending, and the party's over. The national debt has ballooned to unprecedented levels, and interest rates have spiked, making old solutions ineffective. Back when the debt was $5 trillion, it was possible to grow the economy fast enough to keep up. But now, with debt soaring past $35 trillion, it's growing much faster than the economy can handle. Every new dollar borrowed comes with a higher price tag, turning what was once a manageable challenge into a looming crisis. This toxic combination of record-high debt and rising rates is a scenario the US has never truly faced before. The old reassurances, "we've had high debt before," simply don't apply in this new reality. The consequences aren't just theoretical. The debt is draining resources from schools, hospitals, and vital services right now, not just in the distant future. This isn't just a technical or accounting issue, it's a fundamental shift in how our economy works. The math has changed, and with it, the risks have grown more severe and immediate. We can't simply print or borrow our way out of this situation like we did in the past. The danger isn't just theoretical, it's real, and it's already at our doorstep. Pretending the problem doesn't exist won't make it disappear. It's time to face the reality head-on. In 2020, the pandemic hit, and life as we knew it came to a sudden halt. Businesses shuttered, streets emptied, and uncertainty gripped the nation. To keep the economy afloat, the government unleashed trillions in stimulus, sending out checks, boosting unemployment, and supporting businesses on the brink. It was necessary at the time, a lifeline for millions. But the spending never really stopped, even as the crisis faded. After the emergency passed, Congress kept the money flowing, funding massive infrastructure projects, green energy initiatives, and a host of new programs. The result? Trillions more added to the national credit card, pushing our debt to record highs. Meanwhile, the Federal Reserve raised interest rates to fight inflation, making all that debt much more expensive to service. Interest payments have doubled in just a few years, eating up a bigger and bigger share of the budget. Now interest is on track to become the single largest item in the federal budget, outpacing everything else. We're now spending more on interest than on Social Security or the military, two of the government's biggest commitments. High spending plus high rates equals a dangerous new reality for America's finances, one that's hard to ignore. The debt we racked up during the era of low rates was one thing. Today's debt, with soaring interest, is a different beast entirely. It's more expensive, more dangerous, and it's pushing us closer to a point of no return, a financial cliff that's getting harder to avoid. The next phase is even scarier, and the consequences could reshape our economy for years to come. Enter the fiscal doom loop. Here's how it works. The government spends more than it collects, borrows to cover the gap, and investors demand higher interest rates as the debt grows. Higher rates make deficits worse, so we borrow even more, which pushes rates up again. It's a vicious cycle, debt feeding on itself. History shows this path leads to disaster. Think Weimar Germany, where hyperinflation destroyed the economy. The US isn't there yet, but the warning signs are clear. Once trust in government finances erodes, it can vanish quickly. Escaping the doom loop would require massive spending cuts or tax hikes, politically toxic moves. So, politicians keep borrowing, hoping for a miracle. But hope isn't a strategy. The loop keeps spinning and the risk keeps rising. If the doom loop continues, the first sign will be more credit downgrades. That means higher borrowing costs and a signal that US debt isn't the world's safest bet. Next comes inflation. If borrowing gets too expensive, the government may force the Fed to print money. That floods the economy with dollars driving prices up and eroding your savings. Retirement accounts and the stock market would take a hit, and mortgage rates could skyrocket. Banks holding US bonds could face failures, triggering a systemic crisis. Globally, the dollar's status as the world's reserve currency would be at risk. If trust in the dollar collapses, imports get pricier and America's influence crumbles. The economic pain would be severe, and the global order would shift. This isn't just about numbers, it's about your daily life. The stakes couldn't be higher. This isn't a distant threat. The warning signs are already flashing. Two major credit agencies have downgraded US debt, something once unthinkable. Demand for US government bonds is weakening. Recent auctions have struggled to find buyers. That means the government must pay higher interest, worsening the debt spiral. Foreign countries like China and Japan are quietly selling their US bonds and buying gold instead. Central banks worldwide are stockpiling gold, preparing for a world where the dollar isn't king. Even regular investors are hedging with gold and Bitcoin, signaling a lack of faith in traditional currencies. The price of gold and Bitcoin has soared as people look for safe havens. When those who should trust the system start looking for lifeboats, it's time to pay attention. The financial canaries are gasping for air. The crisis isn't coming, it's already starting. Are you watching? You can't fix the national debt yourself, but you don't have to be a victim. Stay informed. Watch the yield on the 10-year Treasury bond. If it spikes, trouble is brewing. Check the US debt clock to see the problem in real time. Diversify your finances. Don't keep all your wealth in cash or government bonds. Consider hard assets like gold, high-quality stocks, or even Bitcoin if you're risk-tolerant. The goal? Don't put all your eggs in one fragile basket. Pay attention to policy. Are politicians finally talking about real solutions or just making empty promises? The moment the conversation shifts to real action, it's a turning point. Being proactive beats being caught off guard. The danger is real and growing. It's better to be early than too late.